Washington state capital gains is now the law of the land. So on March 23rd, 2023, the Washington State Supreme Court ruled 7-2 to uphold the constitutionality of this new law. Originally, the Douglas County Superior Court had ruled that it was unconstitutional as it was an income tax rather than an excise tax, and it was not uniform. This law was signed into law on May 4th, 2021. It introduces a 7% capital gains tax on long-term capital gains. And there's a $250,000 exemption. So you only pay capital gains on any amounts above $250,000. Now that exemption amount applies to both individuals and married couples. So married couples are kind of at a disadvantage here. My name is Scott Caulfield. I am a CPA and a CFA charter holder, and I am the founder of Sophos Wealth Management. I just want to run through this new law real quick and then just talk about how you're actually going to file it. First thing it's worth noting, this is something that definitely needs to be filed on time. Washington State has significant penalties. So there is a late filing penalty of 5% per month, and that can go all the way up to 25% of the tax due. Washington also charges late payment penalties, which can range from 9% to 29% of the tax due. Knowingly evading or attempting to evade payment is a Class C felony, and taxpayers who fail to pay the tax, make their returns, keep records, are potentially guilty of a gross misdemeanor. So pretty significant penalties with this one. Now, as far as what's actually applicable to the tax, Washington State is going to define capital gains the same way the IRS does for your federal tax purposes. The big exception here is real estate. It is not, you will not have to pay capital gains on real estate. There is also an exception for qualified small business stock. And I think it's worth noting if you are that short-term capital gains are not subject to the tax. But if you have over $250,000 of capital gains in a given year, this is something you will need to make sure that you file. If you end up filing a federal extension, this kind of works the same way. You still need to make your payment by the tax deadline, so April 18th this year. Now, let's see. In terms of actually filing the tax, you have to create an account with Secure Access Washington, also known as SAW. From there, you create a capital gains account. If you're going to utilize your CPA or another return preparer, you can add them as an account manager user and make them an administrator. They can get all the tax prepared, uploaded, ready to go for you, and then you can sign back in, make your payment, and file. If you're not utilizing somebody else, essentially the steps that you're going to take, you're going to enter your long-term capital gains summary, which comes from Schedule D of the federal Form 1040. Then you're going to enter the total gains or losses that are not allocated to Washington State. And then you're going to enter a detailed list of all the transactions that total up to your long-term capital gains and losses in Washington State. If applicable, you'll also upload charitable donation information because that can give you a reduction in your taxes. And also, if you've got a qualified family-owned small business deduction, you'd enter that as well. And then submit payment. Interestingly, if you're not subject to the tax, even if you were going to be over the $250K threshold, but you're able to reduce it from donations and other things, there's no need to do any filings. So you only have to file this and worry about it if you have to pay. If you have any questions or anything else you'd like to discuss, I'd be happy to have a quick chat. Other than that, thanks for listening.